Good evening, everyone, and welcome. And thank you, David, for having me here. Thank you, everyone, for being here with me tonight. Today, I will be talking about my favorite indicators because this is the theme. This is the topic for this presentation for this whole 2 days, right? And I will share my favorite indicators and how I use them. And so we're going to talk a lot about charts today. And of course, one of my favorite indicators is price action. I'm really happy that David has scheduled me for 6 o'clock because right now the futures market just opened. I know it's a little slow, but I hope that it will be ready enough to prove a point to you about how you need to look at candlesticks. And I hope that's going to be a big light bulb for many of you in here that in the room. All right, so where are you guys from? I am in Detroit, Michigan right now. So if you could please type in here, I just want to make sure that I have everybody engaged and I want to know where you guys are from. Sydney, Australia. Oh, wow, this is awesome. I have a few members from Australia in my trading room. Greenville, South Carolina. I love Greenville, South Carolina. Orlando, Florida. I'm actually from Boca Raton, Florida. Right now, I'm temporary in Detroit, Michigan for a few months, and then I am back to Boca Raton, Florida. Okay, Massachusetts, awesome. Hawaii, good job, guys. Awesome. All right, so let's get started with price action. So, whatever you're trading, whether you're trading forex or futures or stocks or options or anything that you're trading, there's only one common denominator, and that's technical analysis. And you cannot have technical analysis without indicators, because technical analysis is all about indicators and it's about the power of combining these indicators. I'm for very few indicators, and you will see my charts. They're relatively very clean so I can observe price action. I'm a price action trader. So for those of you that are very new tonight, my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading firm that is specialized into educating individuals how to day trade and swing trade the futures and the equities markets. I have been doing this professionally for over 18 years. I day trade the futures market, and that is purely because of tax purposes. And that's the reason why I have given up on day trading stocks, even though I love day trading stocks. But now I'm only swing trading stocks. I swing trade them and I active invest in the stock market. I have been doing this on my own for over 20 years. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I have also mentored traders from beginners to financial advisors to hedge funds worldwide on futures, stocks, forex, and cryptocurrencies. Once you know how to decipher the language of price action and technical analysis, it will open a door to anything that you want to trade. If I throw a chart at you guys after I teach you how to trade and how to look at technical analysis, you will know how to trade even a coronavirus chart. Okay. So I've been a trader, presenter, and speaker and educator. I specialize in high velocity moves. I'm also the designer of an institutional proprietary trading system that is based on price support resistance. And the reason why I'm only the designer is because I have adapted an institutional model to a retail model. So when I had to trade on my own accounts, I had to position size realistically for an account size for a retail trader. And that is a really big adjustment because you trade differently. I'm pretty sure you guys are aware, or if you guys are not aware, you probably are going to be very surprised to find out that hedge funds and institutional traders, they do not use hard stops in their long-term strategies. The only way they use hard stops is when they're programming the high frequency trading computers to day trade. So only in day trading. 85% of the market volume is actually executed by algorithmic trading. So I have designed this system because I have been trading for so long that will enable me to find perfect timings for the market, because I've noticed that the market works in cycles. So how many of you guys in here day trade, whether it's stock trading or futures trading or even Forex trading? Just type a 1 in the room, because I'm pretty sure you are very familiar that once the New York trading session market opens, the composure of the market changes. It changes. It becomes a lot more volatile. There's a lot of volume that is coming into the New York trading session. And sometimes, if you're having like a meltdown in the overnight markets, for example, what we had on Monday, right? If you tune in to any kind of financial media, you will find out that they will try to explain why the market is trying to go up, why the market is trying to go down. It was very funny because I was tuning into Bloomberg and I was listening to them and I was like, wow, they were blaming the market meltdown on the fact that there are fears over the economy slowdown, and there are fears for the new COVID-19 variant, the Delta variant. There were fears. So these two were the fears, okay? And that's why the market was declining. Now, if you tuned in yesterday, same channel, they would say, oh yeah, it's a really great opportunity because it was a fantastic pullback. But the day before, they were telling that it's the end of the world and everybody should be selling. Okay. So why do you think, and we're going to look at charts a little bit later. So why do you think that the market pulled back realistically? Did you guys know what happened on Friday? Option expiration. That's right. It was option expiration. And typically the weeks into option expiration, the market becomes sideways. And you have the specialists that love to pinpoint the price at certain numbers in the stocks and in the indices, and mostly into the ETFs, right? Because the futures are not expiring. The futures only expire once a quarter. But you have these option expirations every month, the third Friday of every month. And this is what typically happens. So I don't know why it's such a big surprise that the market remains sideways and they're forcing the price up or down. So most of the options would expire worthless, right? And then you have Monday calibration. It happens every month. Okay, so it shouldn't be a surprise. Okay, for those of you that want to learn more about Trade Out Loud and what I do, you can visit our website. You can follow us on Facebook, on Twitter, on YouTube, and LinkedIn. If you follow us on Twitter, I do post a lot of trading ideas that are happening before the trigger. So feel free to follow us there. So before we actually dive into charts, let's talk about why we want to learn how to trade. Well, first of all, learning how to trade doesn't happen overnight. So you need to have a little bit experience and you need to dip your toes into the water, but not before you learn how it's done, because it could be very dangerous. If I would tell you right now that, okay, start trading first, and then you're going to, once you see if you like it or not, then you're going to receive an education and you will actually, buy some courses or dive into and surf the net for some free information. It's not right. Think about this. If you were right now, if you just finished college and you go like, you know what? I would like to be a physician. I would like to be a brain surgeon. And you would go directly in the hospital. You would take the first patient that is scheduled to go into surgery for some kind of brain tumor. You're going into surgery, you're performing surgery, and they go like, yeah, you know what? I kind of like it. And then you go get your medical education. It doesn't make any sense. Trading is the same way. First, you need to become educated. Then you open an account. You trade in a simulated account, or you trade, for example, very small size, and I mean really small size. You try to develop a strategy. If you have not learned the strategy, you're trying to find your mojo into the market. And then you take it from there. You learn to trade because you want to give up the rat race. And this is the number one reason why I came into trading full time. It wasn't easy because I had to give up a really comfortable job. And I was working in the domain. I was working in an investment company. So I literally gave up my job because I was working really long hours. And that wasn't really, a lot of pressure on me because I really loved what I was doing. My only problem was the commute. I was driving more than 2 hours every single day, an hour and a half, depending on traffic to go to work, and the same to come back home. So I was literally driving 2 to 3 hours a day. And now I barely trade 3 hours a day. Like today, I was done at 10 o'clock. And I want to show you, so if you're interested in my style of trading as well, I will show you, you could go to my YouTube channel, which is youtube.com/TradeOutLoud. And I have recorded because I have had so much demand for the trading room, and people wanted to know, okay, how is it before I dive in? We do have a 1 day pass, but they wanted to experience like 1 day, 2 days, 3 days, 4 days. So what I did is I recorded the entire session, and you can see how I trade with clarity, full transparency, 100% transparency, all the trades, how they're called and how they're trailed out. It's a hand holding system. So I trade because I want to work from home. I want my own schedule. And once you learn how to decipher the markets, there is no turning back. You're actually going to love a lot what you're doing. And again, you need to love what you're doing. Trading is for everyone. Trading is for everyone. Whether you want to day trade and be in the market every single day, like I said, I have a system that is designed to trade only 2 hours and done. That's it. I don't want to sit around. And I also have another system where I swing trade and actively invest literally 10 minutes a day. That's it. Because I adjust my stops. Perhaps if I have another trade that I scan for, I'm entering the trade. So you literally allocate very little time. But in order for you to become that trader where you trade only 2 hours a day or you trade only 10 minutes a day, you need to put in the effort and you need to learn how it's done. I trade with the institutional money flow. I don't follow institutions. I trade at the same time with institutions. I read the institution's intentions because technical analysis is the same. Price action is the same. They're looking at the same technical criteria that we do, that any professional trader does. I focus on high velocity moves for high rewards. So I'm focusing on getting the most bucks in a very short amount of time. I trade from 9:30 to 11:30. I open the trading room a little bit before 9 o'clock. I do my work. I do my prep work, which takes about 45 minutes or so. Now it's becoming like more than an hour or so. So I'm really continuing the prep work into 9:30, and I'm getting on the mics as close as possible to 9:25 or 9:30, because there's so much information in the market and you have to make sure that you get prepared. And a lot of this information, especially in earnings season, is coming out right after 9 o'clock. And I deploy precise strategies at specific times and specific locations. And I'm going to share with you some examples today. I apply very simplified management. I know exactly where my trails are, so I don't give profits back. But in case the price turns around, I want out. I don't want to have anything to do. I'm keeping my profits. And of course, everybody's going for the unlimited income potential. So what does this mean? Well, it means that if you want to trade more, you can actually make more, right? But I like to have the time to enjoy life. So trading is a recession, depression, and pandemic proof skill. It is. We have been thriving last year through the whole entire pandemic. The New York Stock Exchange and the CME group were closed. There was not one footprint on the floor, on the trading floor. They switched to 100% electronic trading. And guess what? It was fantastic. So the stock market and the futures market, the Forex market, obviously as well, They're never going to go on lockdown. Never. They're programmed to work without any human on the floor. This is today. These are actually today's charts, and I'm actually going to point out the these are the live charts right here. So for those of you that are interested in day trading, these were our levels for today. We had massive gains in RTY, or I'm going to show you a little bit later on. Okay, we had massive gains. You can see that we have clear bullish level right here. Oops, typo. All right, clear bullish level here. This is where we got in. Okay, and this is where we got out. We were done at 10 o'clock, guys, because you could see from purple line all the way to green line, boom, done. Done. It was about 15 or 16 points that we did today in RTY. And then we had another trade in the Dow. We had another trade in the Dow. You see the purple line right here. This is the trigger, and this was our resistance. Obviously, we came into the resistance. We were done. We were done. We were done at 10 o'clock. And then I called another trade in the room right here into the 14,750 with a target over here. That's it. 3 trades and done. How cool is that? Okay. Here are the trades for today. RTY, YM, and NASDAQ with clear entry stops, targets, profit points, 16 points. For those of you that are very new to the futures market, it is a gold mine. It is so awesome to trade a futures market. If you do not know anything about the futures market, I have a webinar tomorrow. So if you are on my emailing list, you're free to come tomorrow. It's my webinar is going to be at 7 p.m. and we're going to talk about the futures market in detail. Okay. 16 points, $800 per contract. In Russell, YM, $275 per contract. So this is well over $1,000 using just one contract of each. NASDAQ, $300 per contract. This could be easily be a $1,500 day, or even if you're trading micros, let's say, for example, you have a very small account, $5,000 account. If you have a $5,000 account, and if you only take like one micro, like literally one micro, guys, one micro is $5 a point in S&P, like that small. You would have made $80 in Russell, $80. You would have made $27 in YM. You would have made $30 in NASDAQ. That would be a gain close to 15% on a day. The account size does not matter. The account size does not matter. You can trade with a small account and you could trade with a big account. You can trade with a prop account. This is a trade that I posted today on the Twitter feed, and I will show you the time when I posted this trade and the setup that I posted, the setup where I posted. Now, in my pre-market scan, I had Neuro. Neuro was the big gainer from the day before, from yesterday. Huge winner. Today, it ran up more than 200%. Do you guys know how much hedge funds yield per year for their clients? It's going to be it's going to come as a shock. Between 6 and 8% per year. I'm talking about percentages you can yield per day if you know how it's done. Okay, if you know how to read charts. So in my pre-market scan, I had Neuro. Take a look at this. The trade was called at $14. It went close to $40, very close. It had a gain of over $25. $25. This is the trade. You can see that I posted. This is my public feed. Yes, we're verified. Okay. And I posted the trade at 8:51 a.m. today. And I said it was trading here. I'm going to show you in a second. It was trading exactly at $14. And I said, Neuro again, top of the list, pre-market gainer, setting a breakout over $14, has room to go to 17 and 18 and then plus, 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 because 17 and 18 were really strong resistance levels. And if they would have broken, if the price breaks above 17 to 18, it would have flew. And this is exactly what happened. Okay, this is exactly what happened. So take a look at the technical chart. See the 14? This is a bull flag formation. This is my chart. This is an hourly chart. This is a really good chart to read your pre-market data on. The gray highlighted area represents the pre-market data, and the white area represents the New York trading session. I'm using 4 moving averages here. You can see that I'm not using any sophisticated indicator. I'm using price action so I can read the patterns. And I'm using these moving averages. I'm using the 10 exponential. I'm using the 20 simple moving average. I'm using the 50 simple moving average, and I'm using the 200 simple moving average. The key here is that once these moving averages are starting to fan out, for example, yesterday, they were in a really tight range. They were like pressed all together. And once the price started to take off, you could see that they're starting to fan out. When the moving averages are starting to fan out, you can expect massive, and I mean massive power trends. Okay, massive power trends. Okay, let's get back. All right, and let's talk about commitment before we actually dive into charts. So be serious about your approach to trading, whether, any kind of style that you may want to adapt. Be very serious to your approach. Stop being a professional student and take some accountability for your actions. Stop being a trading room or a service hopper and start thinking for yourself. Stop with infobesity. Infobesity is actually diving in, from information to information to information to information to information. And I mean for years. There are eternal students that keep on going to the same courses, to the same classes over and over and over again, and they're not achieving success. Okay. So start gathering the information, but once you gather this information, start working with it. So for example, you guys are here. David has put up this tremendous event where you had a plethora of exceptional traders in here. If you remember just 10% of what everybody has said in here, you can form an opinion about what kind of trader you want to be, what kind of system you want to trade, what kind of charts you need to use, and so on. So try to find your niche. Is it day trading or swing trading? Is it investing? What asset brings you the most joy to trade? Is it stocks? Is it futures? Is it options? What is your preferred style? And how much time can you allocate? Because if you know how much time you can allocate to trading, then it's very easy. You can define and you can refine and funnel how your trading structure should look like. Because if you have a full-time job, then it's obvious you cannot day trade. So your focus is going to be swing trading or investing. And if you have the time to allocate, for example, I trade 2 hours a day in the morning. If you have that time to allocate, that is absolutely the best time to trade if you're a day trader. And if you have that time, by all means, dive into day trading, or you can do both. But remember that whatever you do, education comes first and services come second. The most important parts of trading are rarely discussed, like confidence, conviction, patience, mental toughness, discipline, education again, and preparation for the trading session. The trading day does not start when the market opens at 9 o'clock and at 9:30 and does not close, and the market does not, your trading day does not end when the market stops trading at 4 o'clock. Your trading day starts the night before, and also can start at least an hour and a half before. You need to collect all your data. And what I mean by that is economic releases. Don't forget that there's a huge amount of information that is being dumped every single morning at 9:30. economic data. There are numbers that are coming out at 10 o'clock, like consumer confidence, or 10:30, for example. Today we had oil inventory numbers. Tomorrow, for example, I think they're at 10:30 as well. Natural gas storage. So all of these factors represent 90% of the battle. Regardless of your trading philosophy, if your head's not right, you won't be successful. So this webinar is for traders that want to trade in sync with institutions, with institutional money, moves, momentum, and trends. Because the trend is your friend. Don't try to outsmart the market. Why would you go against a move where you have millions of shares, or you have thousands and hundreds and thousands of contracts? You would go against it. You would try to sit in front of a freight train. What do you think is going to happen? Never do that. So this webinar is also for traders who are ready to eliminate frustration in trading. So if you're frustrated because you see the potential, if you lose money in the market, you can make money in the market. Don't be frustrated. All you have to do, a little bit of education, or if you have the trading education, fine tune it, tweak it, fine tune it. That's all you need to do. This webinar is also for traders who want to trade with clarity and stress-free. This webinar is also for individuals that are ready to become consistent and eliminate the noise. We're going to go into charts, and I'm going to show you how I read charts to eliminate the noise. And traders who are ready to learn a methodology that works in any asset. Because the bottom line is that new traders that are coming into the market, they are on the search of an indicator or a holy grail that will tell them what to do. And all they had to do is to follow. They're looking for the easy route out. And there's not an easy way out. There's nothing but work. And I know some of you guys don't want to hear that. Or some of you guys say, hey, I know there's a little bit of work involved. Trust me, stay at it. Even if you're frustrated right now, stay at it. It's 100% worth it. It may come as a surprise or maybe not, but the only non-lagging indicator is true price and price action. It's the only non-lagging indicator. I use very simple indicators that have been used for over 20 years, and I have above average gains. You could go to our portfolios. Our company has been around for 11 years. You could go at TradeOutLoud.com, and under services, we have actually 2 services that are there, one for futures, one for stocks. You could actually scroll, click on one of them or both of them if you want to check both the portfolios, and scroll to the very bottom. We have a tab at the very bottom where you can see our portfolio from years before, not only this month or past month or this year or last year. No, since the inception of the program. So what do I use? I use price action. That means candlesticks and the reaction between bulls and bears. I also use candlestick language for patterns. I use moving averages. I use the 20, 50, 200 SMA, and I use the TED EMA. EMA is the exponential. Or if you do not want to use the 10 exponential moving average, you can use the 8 simple moving average, which is very similar to the 10 EMA. I also use volume because I want to see the market participation. And this is regular, simple volume that shows how many shares or how many contracts are in play that day, that hour. I also use the William percent R. The William percent R is an indicator that is super helpful, especially when you're having a dive in the market, because if you correlate correctly the William percent R with price action and candlestick language, you have the perfect recipe to buy every single dip into the market. We were heavy buyers. If you go to our portfolio, you can see that we were heavy buyers on Monday. We were looking on Monday for a rotation. We got it. We knew that the market was going to rotate on Monday, and it happened. The market is trading right now into the highs that you guys see today, and we had some pretty impressive rotations and pretty impressive move up today because of the rotation that happened on Monday calibration, right after option expiration. Institutional levels are calculated based on pure price action, and every high frequency trading computer out there is designed to trigger, to fire on these institutional levels that we use every single day. Market is all about synchronicity and divergency, because if you have noted in yesterday's trading session or on Monday's trading session, we had even amongst indices, we had some that were weak and some that were stronger. For example, NASDAQ can lead on weakness and the Dow can lead on strength, because it depends on the underlying stocks. Live charts, time for some live charts, guys. All right, so let's get technical right here. All right, let me know if you guys have any preference on a stock. Type it in. We can discuss on any stock that you guys type it in here. If not, I'm going to have to pick a stock. I don't like picking stock. I like someone else to give me the stock. Peloton, you got it. Okay. So first of all, with Peloton, we're going to do a top-down analysis on it. And Tesla, okay, Sunny, you got it. We're going to do two. We're going to do, okay, BBBY, we're going to do that too. Oh my gosh, too many. TXN just reported earnings, friend. Okay, ES Futures. Wow, okay, stop, guys. We're going to try to do all this, okay? We're going to try to do it. All right, so Peloton, first of all, what do I look at? I look at price action. Now, this is a daily chart. The most important part of the daily chart is basically to see and acknowledge where the daily bar is closing, right? Where the daily bar is closing. The close price is one of the most important elements on the technical chart, whether you're day trading or swing trading. And you can see here that we have a really baby inside bar. This is actually a strategy that I love trading. So I'm going to give you right now a trade for tomorrow. Watch out. So play it out. Let's see how it plays out tomorrow. If tomorrow, you see this high of the candle right here, because we have the high. If the price tomorrow is going to break above the high of the candle, which is 127.17, above it. So look for 127.20, 127.25. If it trades above that, it will go higher. I'm going to give you, with the help of technical analysis, with the help of fits, I'm going to give you the projections, which means that I will tell you exactly where I think that the stock is going to go into for swing trading purpose. The first target is going to be into the 129.75. Then it's going to run into the 135.78. Big resistance is coming up into the $139, deriving from these prior pivot highs, prior pivot lows right here. This support is actually going to translate into minor resistance. So at this point at 139, there's going to be huge resistance. If it knocks that 139 out, the next stop is going to be 143. But I want to show you something else, how to read price actions, because that's what I'm here for. Okay, so I'm going to go to E-mini S&P because I saw there was a post about HP was asking about the E-mini S&P. So this is a really small time frame. This is a 1-minute chart. But I do want to... Yes, I'm using Kenton. I'm using the Fibonacci retracements, but I'm using then the opposite way to find out extensions. So to find out projections, future projections. All right. So you can see here, I'm going to zoom in. I'm going to zoom in because I want to prove my point here with price action. You guys can see this candle, right? You guys can see this candle. All right. So it has a high of 43.53.5 and it has a low 43.53. I'm going to tell you right now, it's still, the market has just opened, it's super slow, but I'm going to tell you right now that if it's going to go up 2 ticks at 43.54, so if it's going to hit a 54, it's going to go higher. So it needs to go to 54. This is right here, or 53.70, 53.75, or even 54, and it's going to go higher. Remember, this is a small time frame because this is how the price action continuation acts. Red candles are bearish candles. The formation of candles is very intuitive into trading Because for example, if you have a candle that has a bottoming tail, and if it has support, and if it's trading above a 20 simple moving average, the 20 simple moving average will act as a push for the price, will act as dynamic support for price. So if the price is going to trade, for example, if it's going to hit 53.75 right now, so 53.75, we only need a one tick higher. You're going to see that it's going to start to take off, most likely to 54 or 54.25. So candlestick language is very, very important. I wish the market would move a little bit more so you can see the price action interaction between the bulls and the bears, but it's not moving that much. All right, so I'm going to take a quick look at Tesla right now, TSLA. Okay, and I'm going to zoom into the daily chart. Oops, sorry about that. All right, here we go. Let me just eliminate these fibs. Here we go. All right, so where do we have Tesla? This is the daily chart of Tesla. Tesla closed with a high right into the 20 SMA. The 20 SMA is acting as resistance. When the price is trading above the 20 SMA, the 20 SMA is support. When the price is trading under the 20 SMA, the 20 SMA is resistance. These are dynamic support resistance. All of the moving averages react as dynamic support resistance. When the price, and if the price would have closed above the 20 simple moving average, the price would have went higher. So I can tell you right now that if the price is going to trade over today's high was 664.86. If it starts trading above 664, I'm sorry, did I say a different number? Okay, so the high today is 664.86. If it trades tomorrow above 665 is all it needs. 665, it will start moving higher because it would clear the 20 SMA. The 20 SMA has that lid influence right now. It's putting the lid on price. Okay, so it's not letting the price go. Now, another thing that I wanted to share with you is that if we have the price contained between moving averages, it's sort of like into two rubber bands. So it's not going to go anywhere. It's going to go back into the 50 SMA, and then it's going to run back up into the 20 SMA. And the more it goes back and forth at one point or another, it needs to break either above or below. It's going to break that rubber band. So in this particular case tomorrow, if we break below the low, let's say 650, what's the low? 650.29 today. It will complete lower back into the 200 SMA, no question. So it will be bearish from this point to this point right here to 640, at which point this becomes bullish again back into the top of this 20 SMA. It's not hard if you know how to read price action, okay? All right, I have time for just two more. BBBY. BBBY, daily chart in BBBY. This is Bed Bath and Beyond. I mean, the service is just terrible in this store. Like every single time there are like huge lines, or there's nobody there, or there's only one cashier. Okay. Anyways, so BBBY, very choppy price action. Very choppy price action. See where it closed? My point exactly. Here's what's going to happen tomorrow. If tomorrow we're going to trade above today's high is $30.19. So if it trades above 20 to 22 or 25, 30 point, let's say 30.20, 25, it will go higher. And it will go into a target of 31.50 at least. And then it needs to clear this space in order to continue higher, but it will take some time. But these are the parameters, and this is pure price action. It trades above the high, it will enter a continuation pattern, okay? It will enter a continuation pattern. Let's take a look at TXN. Okay, so TXN, nice move to the upside. Let's take a look at the 1 hour. Okay, it had earnings, like I said, TXN, Texas Instrument, had earnings right after the market closed, and you can see the big dip down, right? These sometimes are buying opportunities, even if they have weak earnings. Think about this. Netflix had weak earnings, right? And Netflix is now into an inflection point. It's actually into a really strong support level. So if Netflix is going to start rotating off of this level, it's going to be a buy zone, because investors are going to be looking. Listen, TXN, Texas Instruments, still very strong company, still incredibly strong, and it's still trading into support. So if you're looking at a high structure, so it's trading right now at 185. If you're looking right here at 185, where is 185? It's still trading above the 20 SMA. Every single time this stock has visited the 20 SMA, look at the price history, 20 SMA pop up, 20 SMA pop up, 20 SMA pop up. Take a look back here in March, 20 SMA pop up, 20 SMA pop up. Okay. So it pops every single time when it's coming into the 20 SMA. This is going to be the decision zone. We will have a double bottom at 183. And if it rotates over 183, this is going to be a pop up again. So next week, you can expect that pop up, or probably even this week. But usually they need to marinate a little bit. Okay. They need to marinate a little bit. All right. One last one for Mara. And that's because I'm very curious how it's trading right now, because I haven't been trading it for a while. Mars is very interesting if you look at it on the monthly chart. So the monthly chart, once you have this month all wrapped up, so we have a week actually and 2 days until this candle closes, because each month contains it's actually 1 full month of trading activity. Going into the month of August, if we top off this candle, so any price that will challenge 3160 over 3160, this is going to zip back up, probably back into the 40s and back into the 50s. Okay. So let's continue and let's get into pure price action and what it represents for us. Pure price action allows you to trade any instrument with clarity. Future stocks, forex, cryptocurrencies can be used on any time frame, whether day or swing, or active investing, or investing, long-term investing for years, for decades. It provides accuracy, confidence, consistency, because it's a rule-based system. Now, I had no idea that you guys are going to be posting these trades, but I look at the technical levels and I look at price action. I look to see where the price is trading on the daily, where it is closing on the daily. What is the structure of the higher time frames? What is the current structure of multi-time frame analysis? And I could give you a read on the charts. The charts need to speak to you before you actually enter any kind of trade. This will eliminate fear and definitely stress. You don't feel stressed because you know that it is textbook. If the price trades above the prior candle high, it will enter either a rotation or a continuation pattern. And if it trades below the prior candle low, whether you're day trading, swing trading, or investing, depending on the time frame that you're using, it will continue lower. Thinking about artificial indicators, how many of you guys watch the show Billions? And by the way, I think it's going to restart. I saw a commercial. It's going to restart in September, and I really cannot wait for it. I love this show. You should definitely watch it. If you're not watching any shows right now, start watching Billions until September. You're going to thank me. It's going to get you geared up for trading, and it's going to get you into that mentality into institutional trading. So in the image here, you have Bobby Axelrod. He's the owner of Axe Capital. He runs a hedge fund. And this is Taylor that works for him. She's a PM. And imagine this. Imagine Bobby going to Taylor and saying, hey, I found an indicator online. It's only $8 for the first month. And then it's probably $199 from there on. And it will show us how to trade. Are you kidding, right? I mean, literally, guys, you need to learn how to read price action. Artificial indicators will delay your learning process and use what institutions are using. Institutions are not using indicators. Institutions are using technical analysis, and that's it. So if you want to declutter your trading, you have to keep it simple. Think about this. How many times have you been in a trade that triggered and then stopped you out, right? How many times have you found yourself chasing trades because you really don't know what you're doing in trading? How many times have you stared at the screen, not knowing what to do, yet you pull the trigger anyway and you lose money? And how many times, you feel lost, not knowing where to enter and where to place the stop, if you know how to place the stop? And how often do you find yourself in a trade in the middle of the news announcement? That sucks, right? Because it's going to take you by surprise. It's either going to make you money or you're going to hit a big home run, or it's going to stop you out. So in trading, you have to keep it simple. Read price action. Price action is free to watch every single day in the market. You have a continuation of candlestick, you have a continuation of momentum, you have rejection of price and rejection of lows, then you have a reversal in the market. Indicators are delayed. They're always going to be delayed. Even the moving averages that I showed you, they're delayed. There is not one indicator that is real time. Price is the only one. Price action will provide accurate read on any charts, any instruments, will override any news events, artificial indicator earnings, and even dark pools. Price action and technical analysis will help you to find trading opportunities in any kind of market environment, in any style of trading and any instrument, whether day trading, swing trading, or even actively investing or investing, like I said, for decades. And the best part about it, you only have to learn it once. Just watch price action. If you're very new to trading, get some candlesticks on your charts. Forget about moving averages. If you're very, very new, take a week or two and just study those candlesticks, how they move, when they open, how they close. Remember, time frames are very important when you correlate time frames. If you're a day trader, I highly suggest that you stay away from 1 minute and 2 minute charts and tick charts. Just throw them in the garbage. That's where they belong. They are designed to lose you money. They're designed for algorithms. They're not designed for the retail trader. Trust me when I tell you this. And then if you want to focus on high probability trades, your go-to chart is going to be the 5 minute chart. It's not that I'm saying it. Any professional trader, any institutional trader that you may have been in contact or you may enter into contact with will tell you that the 5 minute, and I mean a trader that really trades the market, because there are so many individuals that are posting, for example, on Twitter levels and this and that and whatever, but how many of them are really trading? How many of them are putting their money on the line? Because there are a lot of individuals that, just like to talk about the market, just like to teach the market, but you never see them trade real time. Okay. All right. So no sophisticated indicators needed. Learn a system that will allow you to accurately find entries, determine technical stops, calculate targets, trail stress-free, translate candlestick language into profits, identify patterns with ease. Because if you have a chart that displays the pattern, a technical pattern that is there, it presents the opportunity, you take it. If you don't have a pattern, do not take the trade, and do not chase trades. Do not chase trades. If you chase trades, you are going to zoom out your risk level. So instead of having a risk, for example, for $200, you're going to have a risk of $700 when you're trading. And oftentimes you're going to get the trigger. It's going to run for you just very little, and then it's going to turn around. Why? Because it's either going to hit one of one of the FIB projections. It's either going to hit some kind of resistance, and it's going to turn around. You're going to enter. So you're basically, when you're chasing a trade, when you're seeing green, you go like, oh my gosh, everybody's in. I got to hop in. It's going to go higher. Okay. So you're probably getting in when everybody's going out. So using simple strategies, you get 100% pure price action, and technical analysis is the way to go. And bottom line, knowledge is confidence. And when you have confidence, you're super relaxed when you're taking trades. Everything you want is on the other side of fear. And that's truly in sync with trading psychology and with mindset. Our system win ratio, if you have been trading with me for years, we have members that have been trading with me for 11 years since Trade Out Loud came about, literally for more than 11 years. Day trading futures with a win ratio of 87% and swing trading stocks with a ratio of 89%. This is our win ratio. No, it's not 100% because, hey, there's no perfect trading system in existence. There's no such thing as a perfect trading system. You could go to our website to read a lot of reviews. We do teach a lot of individuals how to swing trade stocks. We teach individuals how to day trade futures. Kenton, I don't trade stocks, and I don't trade stocks anymore. I used to trade them for 20 years. The reason why I don't trade them is for tax purposes. If you are interested in futures trading, tomorrow I am going to have a free webinar on futures, and I will explain why I don't trade stocks anymore. Because when you're making profit, and especially now with the the taxes have gone higher right now on everything, including trading, right? You really don't want to pay a lot of taxes because you know what? I hate working. Okay. I don't mind working and, kind of paying Uncle Sam for, for a share, for whatever. But the reality is that I don't want to give 60% of my profit. I don't want to give 0.5% of my profit, because this is pretty much what it comes to. So when you're trading stocks, you're giving half the profit. So you're working 50% for IRS or for the government. Okay. So in case you didn't know, they hired you. So that's one of the reasons. Futures is different. Okay. So just Google it. Google advantages of futures trading. You're going to see you have the 60-40 rule here, which is so much better than in stocks. All right, so you can see I'm just going to read some titles in here. The class is very intensive. We did a 10-day power course. Melissa took the 10-day, Trader took the 10-day power income course. She was blown away. She's still in the room with us. Alaya is still in the room with us, is one of the best mentors, traders in the business. Life-changing experience, the swing trading course. So regardless of what course you're taking, you're going to see we only have 5-star reviews. And there's a reason for that. I'm making money and they're making money. So our clients are making money, our members are making money, and we're delivering above average education. So if you're interested in a really high grade and an institutional grade trading system, we teach you, regardless of what you want to learn, how to trade, whether stocks or futures. We teach you how to trade stress-free. And by the way, the futures day trading course will teach you how to day trade stocks as well. So you can day trade stocks using the same methodology, and you can also day trade futures. So it's a really powerful course. It will teach you how to trade both assets. We will teach you how to trade institutional levels. You're in sync with institutions. You're not defaced. We're going to teach you stress-free levels. You saw the levels that we know: bullish above, bearish below. This is the target. Boom, done. Precise buy and sell zones and triggers and patterns management. So you know what to do once you're in a trade, once you're hitting target one, how you're going to react. What are you going to do? Are you going to sell all? Are you going to sell half? Are you going to sell a quarter? I mean, what is your trailing strategy? We teach you all that. We're also going to teach you how high-odds patterns and setups, and how and where to place the stops. This is the most important thing, because you need to know where to place the stops so you don't get dinged out of trades. And by the way, I don't think there's any surprise that our data is being sold, right? Our data is being sold. So our brokers are selling data to companies like Citadel, right? You remember Citadel with GME, right? They borrowed Marvin Capital with about, I forget like how many, never mind. Okay. So I don't want to open that can of worms. So trading psychology, we teach you how to put the puzzle together. Trading is not about one indicator. No, it's not. It's not about a bunch of indicators. And it's not only price action, or it's not only strategy. It's not only this or that or psychology or whatever. No, it's the ability of the individual to put everything together in a nanosecond. That's it. You know how to put everything together in a flip of a second, you're good. You don't know how to put everything together in a flip of a second, you're going to lose money in the market. And this is where nobody in the industry is going to teach you how to do. We teach traders how to put the puzzle together in a second. So we teach this institutional grade trading system, and this program is for you if you're losing money in the market right now, if you don't have a system, if you don't have a process that eliminates emotions, and you're literally, like have that hot potato feeling all the time. If you lack confidence, then this course is for you. And literally this course is going to change your life, and it changed so many students' lives. We literally have thousands of students that have taken our courses, and we only have 5-star reviews. They're still with us in the trading room. We have a trading room. We have over 300 members in our trading room. Learning how to trade is not inexpensive, but guess what? Compare this to the amount of money that you lose. OMG, right? You can lose a lot more if you think about it. We're starting the class on Monday. So July 26th on Monday through the 20, I'm sorry, this is 26th through the 30th right here. So it's through the 30th. Oops, here it goes. All right, I don't want to have any mistakes on here. Okay, So it's through the 30th. It starts on Monday, so it's through Friday. It's from 2 o'clock to 4:30. If you like to learn more about the class, you could go to TradeOutLoud.com and I'll show you exactly where to go. Or you can shoot us an email at info@TradeOutLoud.com if you want to find out more about the course and what we teach and what we do. The prices will go up very soon to $7,000. So right now, I think this is going to be the last month when it's $4,997. It's going to go up, and then it's going to go again up into the end of the year. We're offering a promotion of 3 months into the trading room. And when the price is going to go to $7,000, we're not going to have the 3 months. We're only going to offer the course and then jump into the trading room at your cost. For example, I want to show you very quickly here. If you dive in here, this is the link. You go to our TradeOutLoud.com. You go to futures day trading if you want to learn more about the course, curriculum, what we teach. This only scratches the surface of what we teach here. Only scratches the surface of what we teach. There is a week of jam-packed, plus you're going to learn a lot more. And if you're interested into the swing trading, the swing trading course, we have open enrollment, but this is in September. We just wrapped one up. And of course, if you're interested in the services, we have the futures trading room. If you think, hey, you know what, I have what it takes, I'm just going to follow you. We have a lot of traders that never traded in their life. They jump into the trading room. I'm giving them a lot of clues and a lot of information on how to trade out position size, etc. So I'm literally doing like way over my way over what anybody else is doing in the industry. So if you want to learn how to trade by just diving in, you could start following us. It's $299 a month. It's $3,000 a year, and we have a day pass for $25. Also, if you're, for example, interested into how we run things at Trade Out Loud, I have 1 more minute left. All right. Within the last 1, 2, 3 days, so Monday, Tuesday, Wednesday, I have actually recorded how we traded. So this is the trading room session, just to see if you can follow and if you can trade along with me. It's very easy. I give you everything. So not only that I teach you how to fish, I put the fish on your plate cooked with a side dish, and I give you dessert. So that's about it for tonight. Thanks so much, David, for having me. And I really look forward to seeing you guys in our class, in our upcoming class on Monday. We only have, by the way, 2 seats left. So that's it. Thanks so much.